Hello and welcome. We are back with another stock review. This is a series that we have been doing. So today we are going to talk about a company established in the 1950s, Indian company which manufactures electrical equipments. So this company is based out of Noida and we are talking about Havells. Let us talk about the brands what Havells has. So Havells has four major brands: Crabtree, Standard, Lloyd, and Rio. Standard was the first brand that they started with. Then they came up with the specialities Lloyd and Rio. So each of these brands has its own product line, but in a generic basis, here is the list of product line what Havells has. Now let's look at the chart. So basically, we're going to do the same thing. First the technical, then the fundamental with numbers, shareholding, peer comparison, and so on. So if you look at the chart, candlestick chart, again 8 months, 4 lines. Basically, we look at the daily moving averages here. One interesting fact, if you do not know, if you had bought, let's say, 10,000 worth shares in 2002, today the cost of those 10,000 shares would be 6.19 crore rupees. So imagine the strength of this chart and how it has grown. So 4 lines again, you see red one is the 20-day moving average, orange one is the 50-day moving average, then there is the yellow one which is the 100-day moving average, and finally our favorite, our baseline that we consider because it caters to 2 quarters, and that is the 200-day moving average, where we usually buy the stock if it is a very good stock to have. So again, looking at these indicators, we see they are nicely separated, although in the months from, let's say, March to July, they were quite interchangeable, but still a growing trend because the baseline 200-day moving average is still separated by these three. Let's look at another indicator which goes well with these daily moving averages, and that is the RSI, the relative strength index. Now, this RSI chart again can be plotted into upper bound and lower bound. The red dotted line is your upper bound, which is calculated out to be 70, and the green dotted line is your lower bound, which is 30. And the zone between these two lines is your blue color zone, which you can see in the graph, which is your strength index, which is marked with the movement of the stock. Now, usually we say that the best time to buy the stock is between 40 to 60. That's usually the best time when the stock can be bought. Now, if you combine this theory with the daily moving averages, you can see. So, for example, let's take an example between June to July, the node where you can see from where the stock rose up, right from the line of 40, it went up. And if we plot the same line on the graph, it comes out to be around the 50-day moving average. That's when the stock rose up. Although the daily moving averages are chaotic, the RSI seems to be quite a good indicator. Let's look at the revenue for Havells. If you see the 5-year revenue consolidated, we can see steady growth. But if you compare 2019 to 2021, it's round about the same because of COVID. But again, if you see between 2017 to 2019, definitely a good growth. Let's compare the ROCE and the 5-year average ROE. So if you see both are above 15. Historical revenue growth is 4.3, which is not bad. Debt to equity is 10, which is on the higher side. But again, we can check the other indicators to, verify our theory. So let's look at the net profit. Again, consolidated. 5-year chart shows a good growth. Comparing 2017 to 2021, we can see 2017 was 486, 2021 was 1044. Let's look at the shareholding pattern for Havells. A standard pie diagram which shows the distribution. The dark blue one is promoters holding about 59.47%. The green is the foreign investors holding 24%. The amber one is the domestic ones, which are 8.29 and others are 0.06. The pointer points to dark blue because the promoters do believe in the stock. They hold majority 59.47. Coming to the right side, right from June to June, 1 year chart, if you see the pledges, there are none, which is a good indicator. Let's look at the competition for Havells, basically the peer comparison. Now, if you see the peer comparison, Havells holds about a market cap of 76,750 crores. Siemens is its second most, close competitor with 79,343 crores. Because the rest of the competition, which is ABB, CG Power, and VGuard, all are below 50. So Havells is second best, you can say. But if you see the ROE percentage, which I have highlighted, it is 20%, which is most than all others. Net sales, again, if you look at net sales, it's the highest among the peers. Finally, coming to conclusion, we can say that Havells is not a large cap. It's a growing company within India. It's competing with giants like Siemens. It's a must have for your portfolio. What I can say is you can buy it on dips, you can buy it at a 50-day moving average, or when an RSI reaches around 40. With that said, I thank you all for watching. Until next time, cheers.